You've probably watched a passive income video before, and it probably made you feel like you were one idea away from financial freedom. That feeling? That's what they're selling, not the income. The pitch versus the reality. Let me explain what I mean. Every year, especially after tax season, passive income becomes the most searched topic in personal finance. People see their tax bill and think, I need more income. Less work, more money. That's not a bad instinct, but the advice waiting for them is designed to sell a feeling, not build a future. Here's what's actually being offered to most people right now. Dropshipping, digital products, faceless YouTube channels, affiliate marketing systems. None of these are passive. Not at the start, not in the middle, sometimes not ever. And yet millions of people spend money on these ideas every year because the pitch is compelling and the people selling it are good at their jobs. The problem, the word passive, is lying to you. Here's the harder question nobody asks. What does passive income actually look like when it works? The word passive is doing a lot of heavy lifting in 2026. When someone says passive income, they mean money that comes in without active work. That sounds simple, but they're usually describing the end result of something that required enormous active effort to build. A rental property isn't passive. Not when you're managing tenants, not when you're handling repairs, not when you're refinancing in a rising rate environment. A YouTube channel generating ad revenue isn't passive either, not while you're building it. You're scripting, filming, editing, publishing every single week. Even a dividend portfolio, one of the most legitimate forms of passive income available, requires years of active investing before the dividends become meaningful. So what's the problem? Passive income is being marketed as a starting point. It's actually an ending point. It's what you arrive at after years of deliberate, active wealth building. The truth. What passive income actually looks like. Real passive income is built on assets, not systems, not courses, not platforms you don't control. Assets. There are three types that consistently work for ordinary investors. The first is dividend-producing equity. When you own shares of companies that distribute a portion of their profits to shareholders, that's income. Not because you did something clever, because you own something real. Index funds, like VYM or SCHD, pay dividends. You don't need to pick individual stocks. You need to own them, consistently, over time. The second is interest income. High-yield savings accounts, treasury bills, bonds, these pay you for letting someone else use your money. The rates available right now are meaningfully higher than they were for most of the last decade. That's not permanent, but it's real and it's available today. The third is real estate equity, and this doesn't require buying a building. REITs, real estate investment trusts, let you own a fractional interest in commercial and residential properties through the stock market. You get exposure to rental income without a single maintenance call. None of these are exciting. None of them have a 30-minute webinar attached. And that's exactly why they work. If this is the kind of breakdown you're looking for, no hype, just what actually works, subscribe. We do this every week. The path. What this means for you. So what does this mean practically? Before you spend money on a course about dropshipping, ask yourself one question. Does this create an asset I own? Or does it create dependency on a platform, a supplier, or an algorithm someone else controls? Wealth building in 2026 looks a lot like wealth building in 2006. Spend less than you earn, invest the difference in assets that produce income. Let compound interest do the work. The people who actually achieve financial independence, not the ones selling the idea of it, but the ones who get there, almost never arrived through a viral side hustle. They got there through decades of unremarkable consistency. While most people are searching for the shortcut, they are quietly building positions, dividend by dividend, year by year. They don't have passive income channels. They have passive income. Passive income isn't a product you buy. It's a result you build. The selling of it? That's the real passive income business. Remember that.